Hey guys, what's up and welcome to a new Tesla update video. So today let's go over the market, let's go over Tesla, talk about what happened, what we can expect, all that good stuff. And as usual, if you enjoyed, don't forget to hit that like button. Again, nothing I say is financial advice, make your own decisions, do your own research. But ladies and gentlemen, bit of a turnaround today. Tesla up almost 5% on the day, closing. I mean, the market closes in 3 minutes, but it'll be closing around $113, which is about 4.6% up on the day, which isn't too shabby, making back about half only, but still about half of yesterday's loss, which isn't, atrocious, right? Better than nothing, right? Better than another 10% down day. But yeah, let's talk about it. Let's just, decide what this could possibly mean and what we can expect from this. Another thing I actually want to potentially start looking that could be interesting. I think it's this. I think it's this one. Yeah. I want to start looking at this actually. I want to add this to my watch list. And the reason I want to add to my watch list, oh, this is so annoying, is because this is a good way to determine how Tesla will also perform. I want to put it right below Tesla, right? So TSLQ is essentially an inverse Tesla thing, like ETF, if you will. You can see up here, bear ETF, right? It does literally the opposite of what Tesla's doing. If Tesla's up 5%, this is down 5%, and vice versa, right? So this is like a good way to determine as well, because you can choose the overall general patterns, and you can see on this, it does look like we are potentially setting up a double top right around this level of around 90, 91, right? Which inversely, Tesla is potentially setting up a double bottom. Right around this level over here, as you can see, around this kind of 108-ish level, right? So that's something else to keep in mind. Now, very important to note, guys. So we are essentially forming a very similar pattern as to what dude, what is going on with this? It's kind of annoying. Let me make this a bit lower. We are essentially forming a very similar pattern as to what we did back here, right before we had this nice little rally from it, right? From the closure of that day up to the peak. Let's just say, for instance, it was a nice, solid 10, 11% rally. Not too bad at all. Now, we are essentially doing the same thing. However, it's arguably more bullish. And for a couple of reasons. First and foremost, like I said, we are potentially setting up a double bottom. Again, like I always say, these patterns and whatnot and indicators and, et cetera, are not anything. There's absolutely nothing guaranteed, right? It's not like, oh, this happened, now this has to rally. No, it doesn't have to rally. For all we know, it can completely crash 80% tomorrow, literally, right? Okay, not 80, but you know what I mean. The point is the fact that nothing is guaranteed. The sooner you learn that, the better. However, with that being said, these are things that are favoring the odds of a pretty nice and potentially fairly sizable bounce, right? So a double bottom, right? A pretty textbook double bottom. It looks, a little bit nicer here, but as you can see, just essentially a double bottom play, right? Where we have, route, and this thing today is just really not cooperating. Double bottom, boom, boom, nice little double bottom, and then we potentially rally off that, right? So that's number one, which is looking pretty promising and pretty good. Second thing is, of course, an inside day candle. Now, if you don't know what an inside day candle is, I did talk about it before, but essentially an inside day candle occurs when a candlestick pattern formed on a given day completely within the bounds of the prior days or days highs and lows, and this indicates a smaller trading range in relation to intraday trading ranges, right? So essentially like a consolidation-ish, right here you can see, and it usually is a trend reversal indicator in technical analysis, and that's essentially what we're seeing here. Now, we had a similar thing over here. Now, this one was, like I said back when this even happened, that it's a little bit less convincing, mainly because we did actually trade. Well, we actually rallied at the end of the day. We're up 5%. Beautiful stuff. Yeah. So, we ended up, having a slightly less convincing, though still pretty decent inside day candle, mainly because, it did actually trade slightly outside of the range over here. As you can see, we did go below the previous day's trading range very slightly, which is why, it's still pretty good and a pretty nice indicator, but it was definitely had some flaws to it, let's just say, right? However, today's is an absolute perfection of an inside day trading candle, where we pretty much traded directly in the overall center of yesterday's trading range, which ranged rather from about 119-ish to all the way down as low as just under 105, right? So we traded right in the middle of all that and didn't go below or above, which is exactly what you want to see inside an inside day candle. Just so many words that kind of mumble together. But yeah, so that's a good sign, right? So double bottom plus the inside day candle is overall a pretty strong sign of a potential my goodness, I can't even speak today. I don't know what's going on with me, but essentially a flip, right? A bounce, essentially. Doesn't mean this is the bottom. This doesn't mean that they say the bottom's in. We can celebrate, cheers to everyone. Congratulations, you survived. No, it could, but I don't think it will. Let's just say that. However, with that being said, I do think this does indicate that we are potentially ready for, arguably even a potential gamma squeeze. In all honesty, with just how much shorting is most likely going on in Tesla and whatnot, right? So that's something else to keep in mind with all these technical patterns that are of course, setting up at the bottom, the inside day candle, etc. Now, of course, the main question is if this is the potential bounce area, which I personally strongly believe it is. You also have the what's it called? On the R side, we have the bear or the bullish divergence setting up, as you can see, right? Whereas the stock essentially made a lower low yesterday, the RSI is substantially noticeably higher. And today, as we closed at this almost 114, you can see the RSI is almost as high as when we closed at 123. Yeah, it's not quite as high, but it's almost like right exactly at the same level, even though we are still well below this 123 level as to where we close, which is almost like an 8.5%, right? So definitely some nice bullish divergence potentially setting up here as well. And I personally believe Tesla will actually bottom somewhere around between 90 to as low as 60. I think anywhere in this range, I personally think will be the bottom. I don't know exactly where. Obviously, no one knows. If anyone does say they know exactly where it'll be, they're lying. However, I do strongly believe that somewhere in this overall range down here will be the bottom, and this, in theory, will be the ultimate accumulation zone. But we'll see, of course, what happens and whether or not that comes to fruition. However, all that being said, the question is, well, if this is the potential short-term bottom, and we do get a nice little bounce here, going into the rest of, or the majority of January, let's say maybe up until earnings or something like that, right? Which I think is roughly where the bounce will lead into. Where does it go, actually? Like, where do we actually bounce towards? Well, if we take the Fibonacci over here, and we go from the potential, what arguably is the current swing high, all the way to what is arguably potentially the swing low, right? This lets us see that the levels that we could potentially rally to is 0.382, which is around 140, which if the stock is really just, still fairly weak overall, the bounce won't go much higher than around this 140 level. However, if we have at least some level of strength still, and, potentially even get a gamma squeeze, right? We can go as high as 150 to even potentially around 162. Now, 162 to me should be the highest. I really doubt we'll go much higher than that. And I honestly don't even think we'll reach 162. I personally will be aiming for somewhere around 140 to 150. This overall would be my personal price target and my personal range that I'll be aiming for Tesla to get this rally that I'm personally thinking is on its way, starting potentially this week, next week, and essentially up until around maybe like, let's say the 20th of January, roughly, somewhere close to earnings. Maybe even the CPI next week or something like that. I think CPI next week is on Wednesday or Thursday. Could be up until then as well, right? Hard to say for sure. However, I would do fairly strongly believe we'll at the very least come up to 140, maybe even as high as 150, right? Which again, even if we come up to those levels just from today's close alone, that would be about a 23% move to 140 and about a 30% move to 150, which at the moment sounds surreal. Like it feels like it's impossible. Like there's no way we rally that much, right? We have to keep in mind, right? It's not impossible. Like for instance, when NVIDIA came all the way down over here, I mean, it took a much longer time, of course, but from here to this recent short-term top, it rallied 75% almost, right? That's a massive rally. Now, granted, it obviously took a lot more time than what I'm giving Tesla, but also I personally think Tesla will be rallying like about half the amount as well. So just keep that in mind. And Tesla also tends to be a lot more volatile of a stock, right? But again, going up today 5% on a day where the market is, definitely green, but not like substantially green, like the QQQ up only 0.5% and SPY up about 0.75%. Tesla being up just over 5 is a pretty nice and respectable outperformance, which is great to see after such a massive underperformance yesterday, right? So that's essentially more or less what I am personally seeing, right? In terms of all these bad boys right here, you can see the 5 and the 10, we are actually approaching it, which we definitely want to go ahead and clear both of them. And if we can clear both of these bad boys here, I definitely think we're in for a nice rally to 140 to 150, right? So essentially the most important levels to look out for, guys, in my opinion right now, is number one, we want to be able to clear this 120 level, but most importantly, the levels that we couldn't clear on these two candles, which is essentially sitting around that kind of 123 to 125-ish range, right? That right there is extremely important, and that's exactly also where the 10-day moving average is also sitting at right now. So those are the levels I would want to clear, right? 115 just to get above the 5, but then the main one is of course the 10, which is again around that 121. So 121 to 125, that general range definitely a level that we want to break above, and more importantly, hold. Right now, taking away these two things right here, taking a look at the 21 EMA as well, you can see is well above us, and I personally expect us to get somewhere to around the 21 EMA. Again, I wouldn't be surprised if we potentially even go above it for a couple of days or so. Probably set up some kind of bull trap. Most likely, in my opinion, test the upper trend line of this yellow line over here is also a potential, in my opinion. Get rejected and most likely fall below, because again, it's not completely uncommon to actually go above the 21 EMA. As you can see, we went above it here several days in a row, and then we just completely crashed below it, right? Went above it over here, right, for a couple of days, and then crashed below it. So it's not like unheard of to actually go above it and kind of hold a bit, but just a matter of how well you actually maintain the hold above it as well. But yeah, that's kind of what I'm seeing, guys. So let me know what you think down below. And the final thing I want to mention is, and again, I don't want this to be some kind of negative thing. I don't want to be picking on someone specifically. It's just the best example I personally have at the very moment. But I'm sure some of you have heard of and or even maybe watched someone called the Tesla economist, right? He's a YouTuber as well, talks about Tesla, etc. He's been extremely bullish on Tesla for an extremely long time, and this is why this market, and I always say you want to not be too greedy, you don't want to avoid margin, you want to avoid just very stupid situations, essentially, which I've seen even my own personal friends get themselves into, right? You want to avoid those situations because this market will punish greed. Worst case scenario, just hold shares. Again, just my opinion, not financial advice, make your own decisions. But worst case scenario, just holding shares on no margin, most importantly, is the quote unquote safest thing to do, because absolute worst case scenario, you just wait, right? There's no time limit, you can wait, right? Assuming it's not money you need, of course. But anyway, so the reason I'm bringing him up is because so essentially he has been tweeting so he went from being extremely positive to extremely negative essentially overnight, right? And this is essentially just a sign of capitulation and what a market like this can do to some people that are not prepared, that are over greedy, that are just doing really stupid things, and just how much like a loss and just how much this can weigh on someone and how much it can flip their mental and just ruin everything, essentially. And this right now is a perfect example, right? Fairly popular YouTuber that essentially had this happen, where I don't know exactly what kind of trade he did, but he essentially lost 10 million of his father's retirement money, which is of course an absolutely astronomical amount of money, right? Just 10 million alone is already a lot to have, let alone lose, right? And it's all lost, right? He even says here, sold, loss is official. The money has been lost, period, plain and simple, right? Which is insane. That is quite astonishing, right? That is an obscene amount of money. And the thing that happened is, ever since this trade, I guess, or I don't know, whatever the hell it was, trade options, I don't know what he possibly could have done to lose 10 million like that, but something clearly. I remember he was talking about buying a bunch of calls on his videos, and this was like back when Tesla was still sitting around like 190s. I remember he had videos where he would be like talking about how he's entering calls and leaps and things like that. I mean, those are obviously getting completely destroyed, if not already gone, with this kind of drop. However, with that being said, right, the point is this happened, and now 2 months ago he also even said something like this, where it's like easy to lose perspective at times like this, which it's true. I just keep reverting back to fundamentals, looking at numbers, and nothing has changed. And then suddenly he's tweeting things like the Tesla has all the signs of a bubble, it may not have completely popped, right? He talks about a bunch of things like this, where just pretty much every single tweet now is extremely negative and extremely like pessimistic as well about Tesla in pretty much every single imaginable aspect you can possibly think of, right? So that's essentially kind of what happens, right? This is just a prime example of what this market can do to people, where not only can you just completely lose an astronomical amount of money just from being greedy, stupid, and just doing really, really stupid, greedy plays in general, let alone your father's retirement money, which is just sad, of course. But it can completely ruin your mental. And now, personally, what I wouldn't be surprised is if he starts shorting Tesla at these levels, because he's just so negative on it, probably will start losing money as Tesla potentially goes up to like 140, 150, potentially realize that maybe he was wrong, maybe even exit those shorts or those puts or whatever, just for Tesla to most likely set up a bull trap around here and then probably actually go back down, maybe even as low as, under 100, of course. I don't know, man. The point is the fact that, it's a fool's game to play short-term games with the market, especially over leveraging yourself, right? It's a fool's errand in a market like this. You really, really got to know what you're doing. And even then, I've seen people that really know what they're doing for like 20 years plus of trading that also have gotten completely destroyed. All right, so just point is, be careful. It's a very scary environment that we're in. Again, don't be greedy, don't leverage margin, all that bullshit. Please, for all that is holy on planet Earth, avoid that kind of stuff. Trust me. Anyways, all that being said and done, again, nothing is financial advice. Make your own decisions, just my opinion. All this is just entertainment. Everything I said is completely non-existent, and ignore everything I just said, and don't take anything I said as advice whatsoever. But yeah, thanks for watching, and I'll see you guys tomorrow. Peace.